Good morning, guys. So normally we'd have a bulletin in the evening, but I decided what would probably be convenient for me was to do the bulletin video on Sunday in the morning because I do the clock data video in the morning. So it makes sense to do them both in the same sort of time frame because then it frees my evening up. I've got the rest of the day just to chill out and ready for the next week because this week's going to be quite a volatile roller coaster. So it's important just to, take time and study, check charts and stuff like that and in readiness for the week ahead. And so hopefully you watched the COP data video, and this is just going to be a quick one. It doesn't really need to be particularly long because we know that we have been euphoric for ages, at least the last week, and because of that the herd have sold and we've really pumped. So here's the development on the DAX. They'd gone long, so their price fell. Okay, so while price is falling, they saw this price action and then they started to sell it here. And this was a decent resistance here. That came into play. Did a video there just quickly. And, we came into this resistance really nicely. And it looked like it was perhaps a double top. But you've got to be careful with double tops because retail guys spot these. And they are really, really obvious for anyone, even to the untrained eye. You can see that's a double top. So you've got to be quite careful because nothing is easy or obvious in trading, okay? So it could have been a trap, was it? Let's find out. And down we came. They'd gone long, so, created that resistance. We create a institutional supply if they buy, or a demand if they sell. Okay, so they'd gone long, so we created a supply. Then we came. And then it looked like we were making this nice move. We're going to make an M pattern, and we could have done this nice move, and we could have looked to go long. But of course, they were very quick to sell on the 2nd, so 10 days ago. Okay, and they were really quick to sell because they saw this price action, and they thought, well, I want to get involved in this. I want an easy, quick buck. And, they decided to sell en masse. And, of course, they're thinking like a herd. And that action there, they really aggressively sold in this box. By selling it, they created a demand. They sold it heavily. They sold it again. And up we go. So, sold it. Ugh. I had to do it again. It's an all-time high. Up we go. And as we went into the close on Friday, guess what they did? They sold. So, and we've got a very thin demand box. And it's really, really tricky to say what's going to happen because we're getting very skewed now. There's 11% long, and nearly everybody is really, really short. But there is a little bit more gas left in the tank. There's still more people to punish, so it could theoretically go higher. We have made a punishment box, and up we go. So this is just like a good demonstration of indices, not just the DAX, but all indices. They've really aggressively sold, and by doing so, it's pushed price higher. So it doesn't really need to be a long video because I'll just repeat myself. Basically, you can see the US 30. They'd sold it, up we go, and they sold it again towards the close. So we should probably be above that box. We've got quite a busy week ahead of us, so potentially we might go a bit risk off. And these could be stop hunts as well. Really, this is such an aggressive move to the upside. It could just be moving just to really get rid of some some baggage and some luggage off the train, and they want to kick people out. It doesn't seem like a rational move. It seems like it's designed for sentimental reasons to crush, the dumb money. So it is ludicrous, but you can see how things have developed over time. Just come to Discord and scroll up. Now the good thing about the Discord is that we've got separate channels, so you can just simply scroll up. Everything is nicely organized. If you're interested in the Dow Jones, there's the Dow Jones section. If we had one channel in Telegram, it would just be a complete mess. So that's that really. So it doesn't really need to be a long one really. The robot is going okay. It's going to be obviously be a tricky week because we've got PPI, we've got a Powell speech, and then we've got CPI, all in the space of Tuesday, Wednesday. So I think after Wednesday, it's going to be okay. It's possibly the bot's going to encounter losses, possible, but we'll have to wait and see. And so far, it's been okay for the high severity data releases, so it might be fine. We've got two robots running side by side: a calm passive bot, which is what I've been reporting, and an aggressive. It's a bit like a YOLO part where it just opens up lots of trades based on technical criteria. And then it's looking for a breakout, but it doesn't like fake breakouts. So that's something that I'm testing. Obviously, if we're looking Discord, you'll see some things that are populated. That's of note. Bitcoin and silver is of note as well. Just looking at the non-coms, look at their large specs to the short. That ratio is quite strong. Look at the price change in the week, absolutely bonkers. And that's it really. It doesn't really need to be much. It's a document, some analysis by Brent there, so read that. It's quite fundamental and it could be a little bit confusing if you're a bit new. But if you've been trading for a while and you like your fundamental macro stuff, it's really, really good. It might bog you down if you're fairly new, but there's lots of information there, and it's telling us there's quite a lot of indecision going into the CPI. And like it says, frankly, nobody has any idea what's going on, which is quite true. It says we're going to get a clearer picture after the CPI. And really, there's not much to say because things are just going against the herd. His oil, it sold, so the price came up. It went long, so the price came down. And it's just it's a common thing. It just happens not on just indices, but across all currencies, all commodities. It has to punish the herd. And I think it's potentially there's too many retail traders out there, and it's causing the skew as well. So I'm going to upload this video now. I need to ready the sheet for later. And I guess that's it really. We are cautioned because the technicals are 50-50. However, the herd have sold, as I showed you just now in the Discord. Because of that, we've got green sales in the sentiment. And pending the technicals pump, which they probably should, then we're going to be euphoria again. And so we're going to keep pumping on risk appetite. And that's it, I guess. So just note that the UK 100, we hit an all-time high. They were really bearish last Sunday. They got absolutely destroyed and massive losses from being short. And so that's that movement there. So if you see red, it just tells us that reduction of those positions of their sentiment. That's horrible, isn't it? It was so bearish, FTSE, and then we hit an all-time high. So talking like catastrophic margin calls. So you've got to be careful and be on the right side. Okay, so if it says green at the static level, you're looking for longs. All right, if it's red, then you're looking for sells. And then you keep on the right side of that trade. Try and be not with the herd, but trading with the banks. And this is what this static will help you with. And if you get the two to agree, then that's even better. DAX, for example, it was a buy, so you're looking for buys, you're looking for dips, right? So if you did that, you'd have been okay. And so that's it. So I'll wrap up now, and I've got the rest of the day and evening off, which is cool. If you need me to help you, just let me know. I won't mind. And that's it. So I'll speak to you guys tomorrow in Discord, and then we'll do the evening bulletin tomorrow night. First disclaimer, for anything that you do in the financial world is that you will need to use very strict risk management. So if you don't have the risk management in play, you're pretty much gambling, okay? And we really want to be looking at trading, and we want to be looking at risk to rewards. And in order to get a good reward, you need to define your risk. And if you don't know where your stops are, if you haven't defined your risk, then you could end up losing all your capital, okay? So you need to know where your exit is, and then by knowing that, then you can forecast your profit. But if you're entering willy-nilly based on some information that you found on the internet, and you've entered without knowing where your stop is, you're going to encounter huge losses. So just to say is that it carries a huge level of risk, and it may not be suitable for all investors, and past performance is not indicative of future results. Okay, so it's a quick disclaimer there.